Hello traders, this is Rich Derrick. This is the Tradesight Market Preview for this coming session. That's going to be Friday, March 22nd, 2013. Today we had a fairly sloppy day where we had pretty good distribution across all three sides. The ES were lower by 10 on the day, and the NASDAQ side down by about 15. The weakest sector of the bunch really was the Dow, which is slightly less volatile than the ES, so on a percentage basis, on a relative basis, actually underperformed all the others. The Nasdaq Composite, the Comp Q, as you can see, I've highlighted here, that was down almost 1%. So definitely some sloppiness, and this is one of the first days where we had some weakness, and the buyers didn't come in at the end of the day to save it. Just keep in mind with the way things have been going with the very positive mutual fund money flows, and also the same thing within the ETF universe. To see that lack of buying late day is kind of a troubling sign for the bulls, and maybe time for some little corrective activity or a pause in the market, where perhaps the money flows that the positive money flows that the market has been enjoying maybe at least temporarily drying up. As far as the other market internals, the dollar was a little bit stronger on the day. Definitely want to keep an eye on the Japanese yen. Japanese yen was definitely stronger versus the dollar, which is one of the key things here that I think could imply that we're kind of getting close to a turn here. The New York Stock Exchange trend was fairly high today, 1.81. We'll look at the chart for the 10-day trend a little bit later, and the VIX was higher on the day for almost all the session, and was really fairly elevated after lunch, so it really kind of implied that we're going to have kind of a weak afternoon. At Tradesight, we were really concentrating on the short side into the close, or after lunch, that is, and had a couple of nice winners. Short some Goldman Sachs. They had a nice late afternoon sell-off. So let's move on to the charts. Okay, here's a look at the ES futures. We're still kind of in that same little bit of a range that we've been in the last few days, but we definitely did have distribution today. Note that the 10 EMA now is sloping down. It's really only been sloping down a couple times this year. We had this little bump in here where the 10 EMA was to the downside, and we're just starting now. We'll have to see if this is something for the bears to build on. Key thing to watch out for is going to be Wednesday's low. So keep an eye on this 1532 area. That's going to be key support if we get down to there. If that gets lost, we're probably going to wind up putting this 50 DMA in play, and then maybe perhaps this static trend line. But keep other things to keep to the forefront here. Technically, we have a MACD cross to the downside, and we also have this active seeker sell signal that's starting to weigh on the market here a bit. NQs had kind of a similar situation to the broad market today. The NQs were actually relatively stronger versus the broad market by a fair amount. Again, the key thing is going to be this prior low here from Tuesday. Make sure you keep an eye on that, because this one here is also coincident with the 50 DMA. And notice that the 10 EMA is really starting to roll over here a little bit better, and we do have that negative MACD cross. Important levels to watch are going to be the 50 DMA, the 6/8 level at 27.34. That's going to be kind of a minor level, and then if we get rolling to the downside, probably not tomorrow, but perhaps next week, the static trend line here that's going to be in play about 27.10. All right, now this is the one chart I think that really speaks the loudest about kind of the complexion of today. This is the multi-day sector chart. We look at the rollover in the growth-oriented sectors, and really the most growth-oriented is the stocks, and the stocks did undercut this prior low and is really starting to roll to the downside here. At the same time, the growth stuff is rolling to the downside. We're starting to see an upward bias develop here in the XAU. The XAU has now qualified a higher low. We have this swing low here. Okay, we made this higher high, which is only a potential until we pull back and then make a new higher high, and we have certainly done that now. So bottom line is this is exactly what you would expect to see if investors are starting to assume a more risk-off posture. Okay, our other risk-on, risk-off metric is the SPX versus the TLT. This ratio chart basically just made a new nominal low on this move, meaning that the TLT, the safety of bonds, was outperforming the growth side of the equity market. We've got still a fair amount of room to go down here before we get into what has been key support, which is this rising trend line that marks the bottom of this trading channel. So there's still more downside here before this particular metric gets extended, and it certainly looks like it wants to develop more of a downward bias, or certainly could anyway. All right, here's a look at the advanced decline lines. On the New York side, starting to level off here. I'm not really seeing a rollover yet, so this is still okay for now as long as it doesn't continue. The one thing I will point out though is that the Nasdaq side here, the NQ side, does have this little potential lower high. It hasn't really qualified yet by taking out this prior low, but it could very easily do that tomorrow with another weak session. So definitely keep an eye on this, and this is definitely would be very bearish for the market if that persists. We do have this lower high in place, and the Nasdaq side has been weaker all year. Okay, and as we mentioned in our first look at the averages, the trend was up on the day. The New York trend closed at 1.81. That's a fairly high level. We've had a couple of high readings in here, but keep in mind that we're still a good distance away from that 1.35 oversold threshold. So there's still more room for this overbought energy in the market here that was just recently recorded to release to the downside here. So if the market wants to, it can definitely move lower without getting short-term oversold. All right, here's a look at the SOX versus the NDX. This continues to make new lows. It wasn't a terrible day. The Oracle news was not good and certainly not well received. It didn't really expand the range on this ratio to the downside too much because Nasdaq was down, but we're definitely in the midst of a downturn here, and keep in mind that we do really have this this expanding pattern in place, which is oftentimes what you will see when the market is actually trying to make a turn, where neither the bulls nor the bears really have control. So this pattern has been expanding here, and this is what reversals can really be made of. So keep an eye on this. This would be very negative for the Nasdaq overall if this breaks out of this range to the downside. All right, and here's a comparison chart of the S&P, that's in the red, versus the NDX in the white. We're starting to see the NDX develop some more significant relative weakness versus the S&P side, which is in the red here. This is definitely a negative condition for the market. More times than not, the NDX will wind up leading the overall broad market. So if we continue lower here in the NDX, that's definitely going to weigh on the broad market ultimately. So definitely keep an eye on how these two are holding up one versus the other. Here's a look at the ratio chart of the NDX versus the S&P. Just keep in mind that as far as being as using your technician skills, the previous chart that we looked at was a comparison chart. Now this is a ratio chart where we're dividing the NDX by the S&P. It basically came down to match the previous low here. We haven't broken to the downside. If we do continue to the downside, then this trend is still in place, and definitely one that is not really welcome. And you can see the relative performance of the NDX versus the S&P really since the bottom last summer has been just absolutely miserable. A lot of it's been Apple, but there hasn't really been enough support from the other major components to really help out here. One thing we really need to do is to get back above this area that we just highlighted, which was this prior low in the ratio. So this is really important. If we continue to deteriorate here, it's definitely going to hold back the market, no matter which of the broad market sectors are doing better. All right, now here's a look at the individual sectors. So you can see that from the rankings here, ranked from on a percentage basis from best to worst. The top performer on the day was the XAU, which is no surprise since it was kind of a down day. The the defensive sectors really did the best today. The XAU is the top gun and the only one that was really up meaningfully. The XAU was up quite a bit. We'll take a look at that later. The utilities were strong versus the market, and even the pharmaceuticals outperformed the market on a whole. The weaker sectors were definitely the more growth-oriented things. Housing sector was weak. Transports continue their weakness, and the cyclicals were fairly weak. This is all kind of is evidence of seeing that risk-off move today. Nothing really popping out too far as far as the counts, but we're definitely getting deeper into the counts in some of these, and we'll have to stay on top of that. So be sure to have this new feature loaded on your watch list to make sure that you're keeping up with the Comer and the Seeker bar counts in the daily time frames. This is really a great tool, and I'm so happy that we finally have this for the subscribers. All right, so on to the individual sectors. You can see that the XAU was the top performer on the day and the only one that was really trading very well. We did play Royal Gold long kind of out of the chute this morning, RGLD. That worked out really well. Had a really nice move to the upside. We had talked about this multi-day consolidation here that really could provide some pop when it left this little range. We really didn't get up and above this prior high. That's definitely going to be the next breakout here. We did just nudge above this 3/8 level on the Gann box, but as we always say, the 3/8 levels are fairly minor. What we really want to do is we want to see some distance above this, and then we're definitely going to have this 50 DMA in play if we can pivot just a little bit higher. The MACD is working in favor of traders here with this positive cross. We've got a good deal of room before we run up into this zero line. And the CCI is climbing, but it's not terminally overbought yet. It's still well below that 200 threshold. Let's take a look at the Dow Jones Utility Average here. One thing I want to point out is that we're getting close to this 8/8 level at 500. They're kind of just pushing this up here. There's really been a scramble, if you will, to put on assets that have some kind of yield, anything that's better than the miserable yield in the treasuries. This has seen a lot of money flows this year, and has been the recipient of a lot of money flows from people seeking yield. But right now, this 500 level is going to be really hard, very difficult overhead. So if the market does start to turn down and you start to see some weakness in the utilities, that'll be a real sign that people are really just pulling back from the market, and we're kind of shaping up here for some sort of a corrective move. Here's a look at the BTK. The BTK is still above this 10 EMA. Our close below it was here, but we haven't been able to qualify that turn to the downside just yet. We need to close below the 10 EMA and then a follow through below that. We don't have that yet, but we're kind of getting close. 1769 or so. If we get below that, that's going to qualify this signal to the downside and change the trend to short-term negative. Haven't quite done it yet, but it's definitely on deck. If we do that, obviously the 1750 area is going to come into play here at the 8/8 level. The OSX was weaker on the day, a little bit weaker than the broad market overall, but it's still basically inside of that big down candle from 2 days ago. Really need to keep a close eye on this line right here, which is that swing low on this move. If we break below this, we're going to be into the C wave that hasn't really kicked in yet. We're 12 days up here in the seeker count on the regular, using our regular conditions. But just keep in mind that this candle right here is 13 days up on the aggressive version of the seeker. So I hate to say it, but this could do it, and this could be the roll that a lot of people were looking for. If we do roll to the downside, the sag trend line here at about 229.25 is going to be in play, and then below that, if the weakness persists, we're going to put into play the 200 DMA. The BKX was definitely weaker than the broad market. We expanded the range to the downside this week. This 8/8 level, 56.25, is a very formidable level and one of the big three Murray Math levels. So keep that in mind. If we start to break and start to lose that, these prior highs here will come into play at about 55.75, and then the 50 comes into play. All right, here's the SOX. The SOX still has this active seeker exhaustion in place, is now a sell signal since we've broken and qualified below the 10 EMA. One thing to make out, we did not make a new low on the move, but if you see the close here, this is a new closing low on the move. So this little index remains relatively weak. The CCI is minus 56, so it's got a good deal of room before it gets overbought, or oversold rather. Here's a look at the Dow Transports, which have really been a bright point for the market this year. Just want to point out that we did break below the 10 EMA today and got a fair amount of distance below it. So now we are, if we get one more tick below today's low, we're going to wind up being short-term negative here in the transports. That's very, very close at hand. If we do go short-term negative, we're definitely going to be looking at the 50, which is going to come into play with the 6/8 level. So about 59.37 or so is going to be a key area for this. But this is definitely a very, very negative candle. Definitely feeling the weight of this from the FedEx earnings, and also the associated stocks have all been very, very weak so far this week. Here's a look at the TLT. The TLT is still short-term positive, pivoting off of this exhaustion buy here. The risk level still intact. I just want to point out here that the 50 has really been defining trend. They pushed up above it intraday on Tuesday, but weren't able to close it above that. We did not get up and close above that yet, so the 50 DMA is definitely the sheriff in town right now, about 117.50. If we get a close above that, we're probably going to wind up putting this static trend line in play. Today we're 6 days up, so we got another 3 days before we get to the 9 days up, where we might pause or retrace. All right, here's oil futures. Oil futures still just banging back and forth in this range between the 10 EMA and the 4/8 level at 93.750. It's actually holding up fairly well, all things considered. But if we do break lower here, this is definitely going to affect the energy-related stocks. And then finally, we should take a look at the gold futures. Gold futures today were a bit higher on the day, but really didn't get a lot of extension here. If we do continue higher, definitely this 4/8 level at 1625, where we roughly have the 50 DMA coming into to play, will really be on traders' minds. So keep an eye on this. We are certainly above the 10 EMA here, and could be using this as a little bit of a buy point if we start to come back and fill a little bit. All right, folks, that's going to be it for today. As always, thanks for listening, and this has been Rich Derrick from Tradesight.